Good morning. You're watching The Market right here in 18 now with me, Aisha Faridi, Nikunj Dalmia in the studios. And what all has happened in the world while we were away for the weekend, and especially the rise in the geopolitical tensions, especially talking about Israel. They're attacked by Hamas. They've launched a barrage of rockets into southern Israel, attacked on the last day of the Jewish holidays over there. And the fatality, of course, has taken quite a bit of toll. In fact, it was a surprise and unprecedented incursion. The militants have taken over several Israeli towns, and they've also taken up to 100 Israelis as hostages as well. Of course, Israel's response has been very, very stern, saying that they're exacting a huge price. Air Force has retaliated with airstrikes across the Gaza Strip. Defense forces have conducted in infiltrated towns as well, and Israel has indicated that a ground invasion cutoff is also going to be now initiated. There's been a cutoff in electricity, fuel supplies, all through to Gaza. But yeah, never a dull moment for markets. About last year, it was all about Russia, Ukraine. Now we have a new problem at hand.
So, Asha, what's happening is unfortunate. It's tragic, it's unfortunate, it's sad, but it's true. Now, let's purely understand the implications of this for financial markets. Since we are talking about Middle East, and every time there is a geopolitical tension in Middle East, there is a fear of geopolitical premium in oil, which is crude, it tends to shoot up. And exactly that's what has happened. Crude prices, as you walk into trade this morning, they will just come up on your screen, crude prices, and that's the Israeli response. But if you just look at the market from the prism of crude prices, US 10-year paper, and the dollar index, and the global volatility, which is CBOE VIX. These are the four indicators which will tell you which way the risk premium in the world is moving. Friday's move, oil, 0.5% higher, US bond yield, 4.8%, US VIX 17.4, and the dollar index is at 106. It's not that Asia has fallen apart or US markets have completely, or US futures have tanked. So in terms of a financial market reaction, I'm purely speaking the numbers here. The financial market reaction so far is that of, there is no panic, so to speak, at least in the financial market per se. Of course, this is an evolving situation. Things have been stirred both politically and as well as geopolitical tension is something which now is real and which now will really be the talking point for next couple of days, at least from a market standpoint also. But for the moment, it clearly appears that markets are saying that, look, this is a attack by a militia group. Global leaders are not supporting it. This is something which has been condemned, and it is unlikely to really have large repercussions in terms of a war. It is not like a Russia versus Ukraine kind of a situation between two countries. This is a militia group which has done something which could be called as tragic and cowardly, and there is no global support coming for it. So hopefully, fingers crossed, things actually should stem down a bit in coming weeks, and that is the reason why there is no large panic in the financial market per se.
Yeah, the Dow futures and the US futures, though, have indicated about a 200-point fall after that attack. But in the trading session, we did have the markets that wrapped up in the green on Friday. For this morning as well, as Nikunj said, no major damage. So the Asian screen has started off fairly okay. For instance, Shanghai and Nikkei, yes, they have gotten off on the back foot. But yes, crude oil continues to remain the big talking point. But that aside, let's also take note of how our own markets fared and what happened last week. You did see a pretty choppy week where for the last two trading sessions, you did have the Nifty managing to recover. So we did close in at a print of 19,650 plus, and it was the PSU Bank Index that really snapped the 5-week gaining streak. Among the top gainers, IT did manage to stand out and was the Nifty Bank that was a bit of a disappointment. 3 straight weeks on the trot that you've seen selling pressure coming in. But by and large, after all the give and take, we wrapped up in the green with the mid and the small cap indices as well gaining traction. So compared to what we've witnessed last week for the rest of the globe, our markets not too bad. It was a flattish close with a mild positive bias. So Nikunj, in terms of our markets as well, we did manage to see that recovery kicking in despite a volatile week.
So Avan, the Bank Nifty is up about 500 points from the low, which is the Wednesday low which we made, and the Nifty is up by about 300 points. Now we've taken support from key levels, both for the Nifty and for the Bank Nifty. The buyback news from TCS, which is a heavyweight stock, is going to be a spring in the stride for the bulls. If the geopolitical issue would have not been there, then you would have made a case that the bulls would have really cut loose in the morning. But given what's happening on the geopolitical front, the market upside now clearly will get compromised. So we could easily go back to a situation where the long bias of the market, which was getting more and more visible on Thursday and again on Friday, may just get challenged. Meanwhile, what markets could do is that they would wait for global development on the political side, on the geopolitical side, and on the financial market side. If there is no panic whatsoever, which is what it appears right now, looking at Dow futures, how Asian markets have moved, how global volatility index have moved, how SGX or GIFT Nifty is actually trading currently, then you would imagine that instead of a Monday, it could be a big mid-week hurrah for the market. Remember, this is an important week because you will hear from IT companies. It's an important month because you will hear, because this is the earning month, and this also could be an indication or precursor of the festival demand. While the markets, I think, were just about getting ready for a launch, the bulls were just about getting ready, now they would perhaps wait. So the Nifty can come back to the lower end of the range, which is that Wednesday's low now becomes very important in terms of the positioning of the market.
Yeah, but I think history has told us that amidst any geopolitical tension, India continues to remain a buy on dips market. And the markets wade through all the walls of worry eventually.
See, Asha, this is my personal view, and Maruf would be joining us. He's an expert in this. This is not Russia versus Ukraine. It's not a war between two countries. It's a militia group who's done some. It's a militia group, and which, in a sense, is not getting any kind of support, with the exception any kind of support from any of the other global leaders or any other countries. B, purely from a context standpoint, the positioning of Israel as a supplier to the world in terms of oil or natural resources is not very large. In the Russia-Ukraine war also, India was able to negotiate something great, which is it was a victory for their foreign diplomacy when they were able to buy crude from Russia at a discount. So imagine if the Russia-Ukraine war had a very limited impact in terms of the supply chain disruption when Russia is a large producer, given that right now it's going to be between Palestine and between Israel. That's a regional market, and supply chain may just get challenged for some time, which would be temporary in nature. I don't think from a market standpoint anything really changes fundamentally speaking, or the fear of inflation actually comes back. What do you think when oil goes up? Oh, inflation is back. And if inflation is back, what happens to the world? So I think it's too early to assume because the data is not accurate. So you cannot make a statement that inflation is back or Fed will not cut rates. It's an evolving situation, sad but true, tragic but unfortunate.
Yeah, absolutely. Okay, talking about this week, we're going to have the IT majors as well come out with their earnings, TCS, Infosys, what have you. Looking at the valuations right now, while Wipro, TCS, Info are the cheapest of the lot, it's actually LTI, Mindtree and Tech Mahindra which are positioned right out there.
So let's start with the buyback in TCS. Why are they considering a buyback? You normally consider a buyback when you are... See, the hallmark for IT companies, at least the big ones, is that all of them are now doing a buyback on a regular basis. So the markets are now clearly assuming that the cash which is coming back into the IT companies, they are doing a lot of buybacks. And that buyback, in a sense, acts as a cushion because every time you do a buyback, it excites the market. Now, the problem with most of the IT companies is currently that even though the environment is not very easy to call, for most of the IT companies, valuations are way above the historical averages, and the stock has seen a run up. So, for example, you look at TCS, it is trading at 27 times, it is up 10%, it is outperforming Nifty. You look at Tech Mahindra, up 20 times, 20%, 20 times, it is handsomely outperforming Nifty. Similarly, with the exception of Infosys, which was more like an howler, most of the IT companies, I think, have done reasonably well for themselves from the recent low. So, IT is not cheap. But market expectations between April and now are different. In April, nobody expected anything from IT companies. Now, the expectations are high. And within IT also, Aisha, I think, Infosys becomes this special situation stock because of that guidance they've given. But I guess large deals are coming back. And that explains why a stock like TCS is not only at a 52-week high, it is also considering a buyback.
Yeah, absolutely. Lots on our plate this week, right? Let me take it across to Harsh. By the way, the GIFT Nifty is not really taking the heat from the global cues, although over the weekend, the Dow futures had slipped quite a fair bit. At one point in time, they were down about 200 to 100 odd points or so. Right now, you're definitely seeing much needed relief and recovery. So just mildly in the red for the US futures as we speak right now. And similar is the case for the GIFT Nifty too. 0.5% I stand corrected. That's where they're currently settling in at. Let me take it across to Harsh then and find out what the global commentary is and whether the geopolitical tensions now in Israel are going to have any repercussion for the global equity markets or not. Harsh?
Right, Aisha. So the biggest current point, which is, or rather the biggest mover with regard to asset classes is definitely one piece is commodities, which is oil. And let's try and break down what a couple of oil analysts are suggesting at ANZ. Well, what they're suggesting is that the key for markets is whether the conflict actually remains contained or it actually spreads into other regions, especially the Saudi region. And if so, it will impact oil prices. What they seem to suggest is initially, at least, the markets will assume that the situation will remain limited. But of course, the situation in itself leaves scope for higher volatility going forward. So they are expecting volatility on the oil front going forward. So that's what we can expect. Quickly moving on, we had Christine Lagarde as well, who spoke about inflation being persistent but slowing, also suggesting that the ECB's current rate will help bring down inflation to the target, which is 2%. They want to bring down inflation to 2%. They're committed, and she believes that they can succeed. They believe, or rather she believes that not too pessimistic with regard to the short-term economic outlook for the European region, and also suggests that they are going to continue to hold rates at a higher level. Quickly moving on, we had Bill Ackman, who's come out with a series of tweets with regard to geopolitics. He's spoken about how inclusiveness, among other things, is going to hold importance in this new world order. He believes that the world is a much safer place when the US actually leads, and it can quickly become a living hell when they fail to do so. Of course, he points out at various examples like the Syria conflict in 2012, the Crimea invasion in 2012 again, the Afghanistan withdrawal in 2021, and he speaks about all of those where he suggests that the government as well as the leadership has to follow through on commitments made to allies and protect the correct interests. So he was pushing that front, and of course geopolitical, the entire geopolitics of the globe is in focus currently.
All right, Maruf Raza's joined just now. Let's get his thoughts. He's an expert in terms of breaking it down for our viewers. Maruf, good morning. So nice to have you back.
Thank you.
Maruf, purely from a financial market, how should financial markets look at this unfortunate, tragic, sad but true geopolitical situation in Middle East now?
See, as we were discussing, oil prices are subject to stability in the region from where the oil comes, because those who put pricing on oil look at the risk factor involved and therefore shape the prices, whether it goes well beyond $100 or it is below $100. The second thing is the conflict that is now evolving in the Middle East could suck in other players, which would then also have an impact on the general look at stability in the Middle East. So as far as the financial markets are concerned, yes, instability in the Middle East always has an impact on oil prices and geopolitics. But the geopolitical situation is still, despite the conflict raging in Israel, is still under control. It depends on what the global powers do beyond condemnation of the attack on Israel and how it pans out onto the world markets and the pricing of oil.
Maruf, as of now, can we say that, look, this is not a Russia versus Ukraine situation. It's not a war between countries. It's a militia group which has done something. There's a military activity which has been carried by a militia group.
Yeah, it is. But, these days in an era of hybrid wars, anything could escalate into anything. Israel and Wall Street Journal have in particular been pointing hands the Iranian on the attacks. Iran, as you know, is an oil producer. Iran, as you know, is a key player in the Middle East. So it could spill over into, if Israel is cornered, into Israel doing some bombing raids or other things on Iran. It has done that in the past or threatened to. And that then escalate the situation. The other 20 odd Arab countries are generally steering clear of the trouble because they have all become party to various trade arrangements and the trade initiatives after G20 and before G20. Therefore, they don't want to spoil the party.
Right. Maruf, particularly for India's defense, what does this really mean? I mean, could it escalate to something which is alarming for us?
Not really in the near future, but there are three things. One is that there is a large Indian population in the Middle East. Now, if the situation becomes rather volatile, then India has to look at least some evacuations, which it has done successfully in the past. Secondly, if there is an economic plateauing of the situation there, the money repatriated into India by the 8 million odd Indians right across the Gulf countries would suffer. Thirdly, India's position is essentially about standing with Israel, more so because Mr. Modi has a very tight relationship with Benjamin Netanyahu. And therefore, India has incorporated Israel also in the recent IMEC, that is the trade corridor which runs through the Saudi area and goes on to Europe. So India has stakes in place, but I think it's early days to say that India would be suffering from this conflict. Clearly, Israel is a partner of India in fight against terrorism, in providing India military equipment worth almost $2 billion. And Israel is an important player in the Middle East. Therefore, India has roped it in with a slight diversion of the trade corridor. So, Israel-India relationship have gone stronger and stronger under Mr. Modi. Now, the issue is the Palestinian cause. Now, Palestinian cause is something which traditionally we have stood for, but this time the Palestinians feel cornered and abandoned. So, therefore, India has to come out with some odd statement which pacifies the Palestinians who have traditionally had relationships with India. But India is right now a player far off. Really, what the world is looking at is the United States, the Saudis, and the Iranians, how they play their cards.
Appreciate your time. Thank you so much for putting the very sensitive issue into perspective. Let's move right on and put the spotlight on the markets and tracking technical levels. We've got Kunal Bothra as well as Vaishali Parekh now joining in. And Kunal, let's get a new take on the index. A pretty flat close, but it was 2 days that we did see a rebound kick in. What do you make of the index in light of the kind of global developments that we've seen? Does that change now the direction?
Good morning, Avan. So, I think short-term wise, it could probably dent the prospects of the indices. It could bring in that added degree of volatility. So, in the last 3 days, there were two parts of the markets which had been a bit more better. One is the market breadth had started to improve. Large cap stocks started to participate on a consistent basis over the last 2-3 days. And the second and the most important part is a significant drop in India VIX, where I think from 13 odd levels, we had gone down to 10.4, 10.5 on the India VIX, and that's a significant drop in the volatility index. The RBI event also out of the way, and no major impact for the markets. So I think on the back of it, we were expecting the markets to be a lot more stable, maybe grinding up just around that 90,600 to 700 mark. But I think after the geopolitical news flow over the weekend, there's got to be a lot more volatility. So we'll have to see how the markets shape up in the first couple of hours, whether there's any major amount of position unwinding which happens or short built up on the index futures. I think that could determine the near-term trend.
Right. Particularly, Vaishali, hi morning firstly. What do you see for financials and the bank nifty in particular? Well, last week, HDFC did try and contribute a little bit. You saw underperformance from ICICI Bank, but then there was extreme strength in a Bajaj Finance. What do you foresee for this week?
Very good morning. So first of all, I would like to say that yes, market is somehow holding on well. So there is a sector rotation, you may say stock rotation. So banking stocks were taking the beating. We are not still getting any conviction for ICICI Bank or Axis Bank. But yes, as you rightly said, Bajaj Finance, Bajaj Finserv, we have a bullish view from since 2-3 days we've been seeing in Bajaj Finance. There has been a good build up and technically also in fact, it is our recommendation from here on. We would recommend a buy in Bajaj Finance because technically I'm looking at a projected target of 87,800. So keeping in mind of this target, I would say 7,700 should act as a very good support. So this would become a buy at every decline for a target of 87 to 8,800. And likewise, now Bajaj Finserv is also picking up because that was still quite, very, very complacent. But now we see a good momentum coming in on Friday. We saw a very strong bullish candle and a good volume tick also. So I would say now that 1550 should act as a support and a positional buy would be recommended for a target of to start with 1700, 1750. So both these stocks, in fact, not only these frontline, but have a look at L&T Finance. L&T Finance also is picking up great strength, getting into a trend. So overall, in the financials, I think I have a positive view and it should be bought at every day.
Right, can see that. In fact, let's talk about some of your other ideas as well, Vaishali. And I see a buy on Infi, MMTC, Railtel.
Yes. So, I mean, if you see now from last 2-3 days, IT index. So let me explain to you about IT index. I mean, the long-term trend has been very well maintained. I mean, if you see a trend line support of 31,500, and that's what I've been repeatedly telling all our clients, all our viewers. So if that support is maintained, and if you see some pickup coming in Infosys, in TCS, and also Tech Mahindra, they have all begun their momentum. And right now, if you see Infosys, I think we do not normally play results. The result season is just to start. We are expecting the result on 12th for Infosys. But purely on technical terms, I would say it is a buy. Keeping in mind 1450 as support. To start with, the first target that I would look at is 1520 and all going well. If this view is right, I would say that even as a long-term trade, this would be a good trade for a target of 1650 to as a positional long-term trade. So overall, I think IT sector is picking up and these frontline stocks should be considered.
Right, Kunal, let's find out what's on your radar, your top large cap bets.
So in fact, I'm looking at more mid-cap names to buy calls. NBCC is the first stock which is forming a bullish pennant formation, heading towards a breakout above 60-61 levels, where it closed on Friday. So expecting a follow-through up move, targets of 66, stop loss at 58. And L&T Finance was also one of the stocks which is very close towards a previous major swing high breakout, about that 138 mark. So expecting the same for L&T Finance, targets of 150, and stop loss to be kept at 133.
Okay, let's talk about some of the other stocks which are going to be in focus, and Anisha is here exactly for that. Anisha, Titan, their second quarter update, what's it looking like?
It's shining bright because the jewelry segment has actually managed to perform much better than expectation. The growth came in at 19% versus 14% at the street expecting, and that's of course on account of the new launches, the pre-wedding demand that they have seen, the pre-festive demand as well as the high value studded sales have managed to ramp up, and that means it is going to be a good news for margins going forward as well, given the fact that the share of the studded products is going to inch higher. The other big surprise came in from the watch segment, wherein the growth came in at 32%, and that compares with street estimates of around 10%. So a couple of these big positives coming in, and Macquarie as a result of that has increased the target price as well. That now stands at around 3,600. So expect a green tick on Titan today.
Okay, a green tick on Titan today. That's the expectation. But that aside, let's also keep the spotlight then on MCX. And it's a news break that's actually been confirmed with respect to the company, Anisha, getting that SEBI nod for their new platform launch.
Oh, well, yes, there has been a lot of flip-flop around this, whether this, new software will go live or not. Of course, there were earlier a lot of bugs as well. The company has managed to debug all of that. Then came case from the Chennai dealers as well. Seems like SEBI for now has squashed that and given the go-ahead to go live with this latest software. The date is actually not officially out, but we are expecting it to happen very soon. Remember, the delay in this transition to the new software was causing MCX a hit on cost to the tune of 125 crores per quarter. So that was a big problem, but nonetheless, the street has already factored this news, in a small way, because the stock is now sitting at 52-week high levels, has seen quite a bit of run-up already. Let's see how the stock reacts, but fundamentally, of course, it's a positive news coming in.
Yes, and we've already seen quite a significant run-up in MCX. Let's see whether it's got further upside today or not. Anisha, thanks for flagging off Titan and MCX and why you need to keep them on your radar, as many other stocks, but we'll talk about all of that after this very quick break. And also welcome on board Sanjeev Bhasin to talk about his multi-bagger ideas.
Back with the market, let's connect then with Sanjeev Bhasin, Director IIFL Securities, now joining in on the show. Good to have you on board and morning. Lots of developments taking place, Sanjeev, over the weekend with respect to that Israel-Hamas war. Just wanted to get in a sense as to how this changes the overall landscape, in particular with the fact that we've seen crude oil prices spike.
Yeah, good morning, Avan. Good morning, Aisha. First, congratulations to all the cricket viewers. We started the World Cup with a bang. The US markets have started to digest all bad news. You saw the best rally in the Dow and Nasdaq on Friday. And yes, we are now in this geopolitical cloud of the Hamas and the Israel, surprisingly big event. But, historically, what has happened is when the first guns are fired, markets generally tend to bottom out. So I would expect in the next 2 days, this volatility to settle down. Yes, crude is a key factor, but let's take it with a pinch of salt. Indian markets are looking to outperform in the near to medium term. And we think that now there will be even more flow of money maybe into India directed, given the weakness in China and given the uncertainty. So I would say that these 2 days will see some weakness and volatility, but it would be a buying opportunity. On crude, it will depend on how Iran gets impacted, and I'm not an expert on that. But given the numbers which are coming, Aman, the demand and the consumption is at a new high, telling you the demand on autos, on cross-selling, and on cross transportation, which is a very, very key indicator that some of the OMCs are going to be coming out with bumper results in the next quarter.
Sanjeev, hi, morning. The one stock that you were pretty bullish on, Titan, and what a smart quarterly update, right? A positive surprise there. In fact, they've managed to deliver a 20% year-on-year growth, and I guess it will only get better with the wedding as well as festive season ahead.
Correct, Aisha, and it tells you that the high-end selling is only gathering more steam. And people thought that after the acquisition of Carrot Line, it will put pressure. I think that has added to the margins. So clearly, Titan is an outbeat. Also, take it an added advantage that TCS announcing their 5th buyback. So I think Indian corporates are in a very, very fine space. TCS is coming out of the buyback, and who knows, 20,000 crore again on the pipeline, which tells us that the company still feels that the stock, their share price is undervalued, and the return on equity after this equity, that equity will get further extinguished. We'll see a lot of money being made. In simply put, in the last 5 times, if you just sold in the buyback and bought it back, you made a 10-12% hedge advantage, and you've always been in the best of the stock. TCS, by the way, has hit a new high along with Titan. So I think that the optimism coming on the upcoming festive season, Diwali, and a whole host of factors will add to the consumption market doing extremely well.
Can you walk us through what your thoughts currently are on which way one should perhaps look at banks? Numbers are great, quarterly updates are strong, but they're just not going higher.
Yes, rightly pointed out, Nikunj, and that's mainly due to the index, and HDFC being a heavyweight, is a key factor in pulling down the bank Nifty. I think a large part of the pessimism on HDFC Bank may be done with. If you see their monthly updates and the gross deposits stroke lending, then it's telling me that the credit demand is very, very robust. And I think some of the banks are giving you an extremely good point. Now, obviously, it's been PSUs which are actually hitting new highs, the likes of PNB, Bank of Baroda, Canara Bank. And we have some underperformance in the likes of ICICI and HDFC. But in Nikunj, I think this is the time these two stocks, the heavyweights, HDFC Bank and Reliance, these need to show their mettle from today, given that Reliance has again garnered 0.5% for the Reliance retail at 4,500 crore, which values the retail business as close to 9 lakh crore. Then less than 60 lakh crore on the market cap of the entire group is, I think, very, very pessimistic. I think the market cap should be closer to 18 to 20 lakh, according to me. So I think HDFC Bank and Bank Nifty should be a key. And we think as the RBI governor was very bullish. He said the best place to be is in India. So I would take his words to be more credible than this present uncertainty which has been caused by this geopolitical event.
Okay, and among the other results that we'll be anticipating for the rest of the week, there's the likes of a Delta Corp, for instance, a Tata Sponge, Avenue Supermarts. Curious to get in your take, Sanjeev, as to what you think we could see in terms of results, or how you expect the street to react for a Delta Corp and an Avenue Supermarts?
So Aman, I think Delta Corp for long-term investors giving you a brilliant opportunity. This uncertainty on GST will be debatable. We know that litigation on matters extends for anywhere between 6 to 9 months. And anyway, there will be a review on the GST. There's been a lot of opposition, particularly from Delhi Chief Minister and the Goa Minister. And look, Awan, I think gaming and casinos are a very, very big long-term, story. And you cannot ignore it. So Delta Corp at this 135, 140 is giving you a brilliant entry opportunity. Given the uncertainty, the price is in your favor. I think results will be very robust. And the next 2 quarters could be even better, given that festive season and the spending patterns will gain more momentum. Avenue Supermart has been a relative underperformer as a stock. The other retail stocks have done well, but I think numbers will be in line, given that their margins should show a slight uptick and the volume should be in line with the expectation. However, like I said, the stock has been a relative underperformer. I would say that this is a value buy, but give it some more time if you want to invest in it.
Okay. Curious then to get in your take on the charts, Kunal, these two stocks.
So Avenue Supermart is something which I do like, and in fact, the stock forming a base at 3,500, 3,600 odd range. Interestingly, the stock had managed to break past above the 200 moving average, and the 3 days of price up move which had happened for Avenue Supermarts, that resulted into some extremely strong volumes, both on the delivery side as well as on the cash side for the stock. And the fact that the stock has come back towards a swing breakout after this kind of a price action and volume action indicates that this could be a bigger move for the stock price. Now, the only point with the stock is that it's a typically low beta stock, low to moderate beta kind of a stock. So there will be periods when the stock moves up high in a very short burst, but then post that we would probably expect the stock to consolidate at a higher range. So this is a natural phenomena which happens into stock prices when they move up higher in a short span of time, consolidate for a couple of weeks, and then move up higher steadily. So I think that's the likelihood which I would probably expect for Avenue Supermarts.
Okay, now very interesting stock which hit the upper circuit on Friday, and that was Godrej Industries. Now, of course, we understand that the Godrej Group, which is one of the biggest corporate groups in India, is in middle of a family settlement. Now, there's no dispute, we're talking about a family settlement. The families become big, businesses are getting diversified, and the family split, in a sense, is, I think, something which everybody is talking about. Now, Godrej Industries, I think, is a standout one, because they have a 23% stake in Godrej Consumer Product. They have 47% in Godrej Properties. They have 64% in Godrej Agrovet. Godrej Capital, they own 88%, and they own 100% of Godrej International. Now, Godrej Consumer is the FMCG business. Godrej Properties, well, we all know that. Godrej Agrovet, that's in the business of animal husbandry and let's go back to that graphic again, please. I was just describing all the businesses. Godrej Agrovet, animal husbandry. Godrej Capital, I'm not so sure what it does. And Godrej International, well, they've got a variety of international businesses, largely in the export front as well. So if the Godrej Group demerger has to go through, it would be interesting to see that what happens to the different factions there, and which could be one of the biggest beneficiaries in terms of value unlocking. Well, the markets feel that it could be Godrej Industries, largely because of some of the cross holdings that, there was a time in India when corporate groups had large cross holdings. The Tata Group, we all know that it took years for Tatas to clean up their cross holding. I mean, there was a time when Tata Chemical actually had holding in TCS before it went public. So all that cross holding, I think, has been cleaned out a lot in Tatas. Some of that has been cleaned out in the Birla Group, but a lot will actually change if the family dispute per se goes through. Sanjeev, this could be a special situation, groups suddenly, family split, and it is something which is going to definitely lead to a lot of value unlocking for some few companies.
Correct, Nikunj, and I think that is why you've seen all the stocks do extremely well, particularly the likes of Godrej Property and Godrej Consumer. Godrej Consumer, by the way, was even guided on a better quarterly result than most other FMCG players. And I think Godrej Properties there will stand out. But like you said, it would be the holding company of Godrej Industry, which is still undervalued compared to what their holdings are. And as this progresses, we'll see more color on that. But as a disclosure, Godrej Consumer and Godrej Property both are under our coverage. We own those stocks in our relative client portfolios. And we think that, just the pedigree of the group, Godrej Property, as you know, is now, I think, arguably the largest player pan-India, owning one of the largest land banks in Vikhroli. And Godrej Consumer has been arguably the best wealth creator in the last 3 years on the FMCG side. So I think, like you rightly pointed out, Godrej Industry would be a very key pay to buy, because you get a sum of parts of all the holding companies, and a holding company discount is fairly reasonable to buy into.
There's the latest report this morning that's come out on Nykaa from Nomura. They've maintained a neutral stance with the target price at about 163, saying that the first half performance sets up well for the second half, which is seasonally stronger, and that they're seeing the beauty and personal care on track, and even fashion as a segment rebounding quite smartly. Within this space, PB Fintech as well has been in the spotlight, the SoftBank block deal as well. There have been a number of buyers coming in. Just curious, Sanjeev, to get in your take on both of these companies and what your stance is.
Yeah, so Avan, we own PB Fintech, we own Zomato, and we own Paytm. We have not got into Nykaa given the extent of competition and margins being slightly on the lower side. But all those three stocks are under our coverage. We think PB Fintech can be a true outperformer along with Paytm. And given the underlying business, I think the overhang of most of SoftBank's holding is over with. Same is the case with Paytm, and Financial was a big key holder. They are now less than 10%. And I think that given the extent of the business updates and how these have become part of everyone's lifestyle, by Paytm and PB Fintech both can be very, very strong players in the coming couple of years.
Okay, fair enough. That's the view coming in on Paytm as well as PB Fintech. Meantime, let's get in a view on the charts then. And Kunal, just going purely by the movement that we saw on some of those Godrej Group stocks. I know Nikunj just flagged it off on the fundamental side, but Godrej Industries, Godrej Agrovet, how are you looking at these stocks, Godrej Properties for that matter as well on the chart?
So Godrej Industries, of course, I think the stock hit a upper circuit, 20% circuit on Friday. So we're bound to see an follow-through up move for the stock price, at least in the pre-open or rather in the open. And then we'll see how the stock or the demand for the stock scales up. Because I think it was just in the last half an hour, last 15 minutes that the stock had risen up higher. So there's got to be some bit of added positivity for the stock price. Godrej Properties on the other hand could be interesting, because I think that's a stock which had been a huge underperformer. I think the stock had a high which is closer to 2,200 odd levels or more than that. So the stock had corrected more than 50% in the last 2 years, and then start to show some signs of recovery. Now back again about that 1,600 mark, inching closer to that 1,675 mark. And the good part is that most of the other real estate stocks are also looking quite charged up and very attractive on the charts. Whether it's the larger cap names like DLF, Sobha, Anant Raj, many of these stocks have shown signs of very strong up move, follow through price action for themselves. So I think Godrej Properties could also be stock from the entire pack, which would look very exciting on the near-term prospects as well.
Okay.
No, I mean, I'm just looking at real estate stocks, Avan. Anantaraj, 100% higher. 100% higher for real estate. For Anantaraj, DLF, another marquee name, Prestige, things in the real estate space are just chugging along very smartly. There is update coming from Som Distilleries not going ahead with the proposed QIP issue. That is something which frankly really does not matter purely in terms of the market positioning. There's another small bit of news that molasses, GST on molasses has come down. It has come down quite dramatically. Now, what is molasses? Molasses is something which is used as a raw material by, it is a byproduct of the sugar industry, but this byproduct of the sugar industry is used by the liquor industry, and it is used by the liquor industry as a raw material, which means that sugar companies may not benefit that much because for them it's a byproduct, but if the input prices go down, in this case the liquor industry actually would benefit. And the molasses consumption, I guess, is maximum if you really go down the barrel, which is that from country liquor to local liquor, and then you move to different qualities of liquor. So it is not that molasses is the universal raw material for the entire liquor industry, but depending on which category or the which product you're talking about, I guess the molasses usage really could be very different. That is something which GST on molasses has been slashed. Cost of molasses could be raised. That I'm not so sure where this graphic is coming from. Okay, let's get more details on that from Asesha, and she's got details on the entire GST rate change.
Well, yes, so the GST Council has gone ahead and exempted ENA, which is used for manufacturing alcohol for human consumption. They've actually ceded the rights to the states, which means if the state governments want to levy GST on alcohol, which is used for human consumption, they can actually do that. But the GST Council exempted it. As far as implications are concerned, we are not expecting any major financial impact of this to any of these alcohol beverage companies, although it will be sentimentally positive, and we are not expecting any impact because state governments in any case had not levied GST all this while, and hence no major financial impact is expected to come out of this outcome that has come in. Had the government levied GST, it would have been a major negative, but as of now it is status quo, and hence no financial impact, major financial impact is expected out of this. Apart from this, GST Council has also cut GST rate on molasses from earlier 28%, now it has been cut to 5%. So the thought process behind this is that it will increase liquidity at sugar mills and it will help in faster clearance for farmers. So on the back of this, the GST Council has gone ahead and cut rate on molasses from earlier 28% to 5%. This is expected to be a positive for Radico Khaitan, and this is because molasses-based ENA, of molasses-based ENA is expected to come down, and hence it will be a positive. So two major implications for alcohol beverage industry, but no major financial impact is expected out of this, although it will be sentimentally positive for the industry.
Okay. Bhajan Saab, there's a lot of action in the entire liquor sector. The bet is that India as a country is moving the per capita curve, which means that from branded retail to better quality, beverage as well as liquor consumption, everything actually is going to be following what global patterns are. If one has to really bet on this entire liquor sector per se, now the options to invest are quite varied. What is the best way to invest here?
Yeah, very good point. And Nikunj, it's telling you the millennial plus the high-end drinking has also become a very big fad. And wherever you go, it's not the choice, it's the best which is always being sought after. I clearly think that a 53% market share, McDowell or United Spirits stands out. Radico Khaitan has been a real dark horse, and it has done extremely well on the diversification of its brands in the slightly lower category. But I think both these stocks are headed higher, given that we are at the anvil of much better times as far as the spending and as far as the festive season. So I would still give a thumbs up to Radico Khaitan and United Spirits in this brand, in this space.
Up for both Radico as well as USL. Sanjeev Bhasin, great to have you on the show as always. Glad you could take time out. See you tomorrow. Let's now welcome on board, or rather, let's take it across to Somit. In fact, IT Bellwether, TCS, will be in focus today, like we've been highlighting on the back of news flow around its fifth buyback, which is going to be coming soon. In fact, Somit is here with all the details on that buyback. Somit?
Well, TCS has always been known for rewarding shareholders, and this is the fifth time that the company has announced that they will be considering buyback on October 11th. Now, in the past, there have been 4 buybacks which have been in the range of around 16 to 18,000 crore rupees, and at that moment, the company had utilized around 30 to 33% of the total cash in books to give away to the shareholders. Now, the buyback price that was considered by TCS on those moments was generally at a premium of around 18% to the current market price, and the acceptance ratio for this buyback. Now, this is the most important part for any retail shareholders. In the first 3 buyback, that was in 2017, 2018 and 2020, the acceptance ratio for these buybacks stood at close to 100%, while the buyback that was done in 2022, the acceptance ratio fell to around 24% because more participation coming in from retail investors. Now, currently, if you see, TCS has a cash of could have a cash of around 60,000 crore rupees on its book. Assuming that it uses 1/3 of this cash for buyback, the buyback size could be anywhere between 18 to 20,000 crore rupees. And generally, given the fact that the company has kept the buyback price at a premium of 18%, the buyback price for TCS could be anywhere between 4,300 to 4,400 rupees, which means that a company could buy back nearly 1.13% of its total equity capital. Now, what is it in it for the retail shareholders? Now, if retail participation continues to remain high even in this buyback, like we had seen last time, the acceptance ratio could be on the lower side. Now, if the acceptance ratio is on the lower side, then generally the gains for a retail shareholder would also be limited. Now, assuming the buyback price is at a premium of 20% to the current market price, and if the acceptance ratio is as low as 25%, then the actual gain for any retail investor by participating in this buyback would just be 5% and not higher at around 20%. So acceptance ratio is the most important thing, and in the last buyback, the acceptance ratio had come down, and if the acceptance ratio continues to remain low, the gain for any retail investor would also be low by participating in TCS buyback. So keep an eye out for what is the buyback size that comes out on October 11th and what is the buyback price announced by TCS.
Oh yes, we sure will be. In fact, let's talk about it with Sandeep Sabharwal as well, who joins in on the show. Sandeep, hi, morning. The TCS buyback earnings tomorrow. What's the take here?
Hey, Aja, the buyback, so there are 2 ways buybacks are done. One is that if the stock price is down substantially and the companies want to indicate that they are positive about their future outlook and they do a buyback. The second buyback is to give money back to the promoters in a more tax efficient way. So I think this falls in the second category because the IT industry overall is going through a tough time. This is just paying out money instead of dividend. They are paying it out via the stock buyback. If you remember, the last stock buyback was at 4,500 rupees. Subsequently, the stock dipped below 3,000. So I don't think people should get too excited about this buyback.
Kunal, are the charts reading the same? That, while TCS may have covered ground at its 52-week high, it may not have, priced in all the bad news.
Well, I would look at it this way, Aisha, that the major bottom for many of these IT majors happened in September, October 2022. And I think even in the month of January, February, when these stocks delivered some negative surprises on results, TCS, Infosys particularly, these stocks did not come back to retest the previous September lows. And now at a point that these stocks have come back towards a 52-week high. So the prices are quite strong. The approach over the last 1 year, 13 months for stocks like TCS and Infosys is quite different than what we would probably have expected in case if there is heightened amount of volatility. Now, if there is any negative surprise, of course, the prices would get into a mild correction. But I would believe that that could actually be a good buying opportunity for stocks like TCS and Infi.
Sandeep, what's the take on MCX as it gets the approval to shift to a new platform? Quite a bit of run-up has already taken place in the stock, though.
Yeah, directionally, the outlook looks because the cost savings they'll do should be quite substantial. But like you rightly said, that the run-up also has been substantial, and overall the commodity outlook, because when commodity prices remain subdued, as is a greater possibility, the trading volumes in commodities also remain subdued. So I would say on balance, a lot of things are already priced in.
Right. Okay, couple of other names which are going to be in focus. We've been talking about as to how the crude surge is likely to impact ONGC, OMCs. There's a quarterly update coming in from Titan as well, wherein the Q2 jewelry business has seen an uptick of 19%. The eye care business as well has seen an uptick of 12% on a year-on-year basis. And then how can we not talk about Reliance after the RDI investment into Reliance Retail, equating to 0.5% stake that got announced. Sandeep, you think what's happening with Reliance Retail could be something we saw at, back in 2020 when Jio had these massive spree of investments?
Yes, I think Reliance Retail has been attractive. So I think a lot of Reliance ventures tend to attract private equity and strategic investor money. But then from the public investor standpoint, I think it's more to do with how much cash flows they can generate. And they've been continuously entering new areas which are more and more cash guzzling. And that explains the reason why the stock has been so subdued despite them venturing into several new areas. So I would think that there's nothing great per se in Reliance. So I think when the overall market picks up, FII flows pick up, Reliance will also start doing better. But there's no case for it to be a significant outperformer.
Kunal, I bet the charts as well read the same. No trigger for Reliance, and I guess the stock as well has been in consolidation. In fact, as well last week, right?
Yeah, I think it's now become more of an event stock because, I remember, I think in the month of, July, August, somewhere, when the stock had this new news flow for Geo Financial Services demerger, it moved up quite smartly, I think 10-15% kind of an upward move for Reliance Industries. Post that, we've actually seen the stock getting into an initial leg of range and then a recent correction, which the stock has come back to the 2,300 odd mark, which was, I think, the starting point for the stock price rally in the month of July. So I think it's now become a stock which would probably get into any kind of a major uptrend into an event flow. But on the other hand, we also look at the major support points for Reliance Industries on the stock prices over the long term. So there have been two important or rather major support zones for the stock price around 2,100. This was in 2023 in the month of January, February when the stock bottomed out, and even in 2021 end when the stock bottomed out at that 2150 mark. So maybe another 50 points, 70 points dip on the stock price. It could actually be a good risk reward to start looking at the stock from a longer term perspective.
Okay. Vishali, let's get some mid-cap ideas from you in terms of where you think that a 15-20% move in next 3 months, the next 2-3 months cannot be ruled out.
Well, so to start with, I'm looking at MMTC. Have a look at MMTC. The stock has already given us good returns because we have been tracking the stock right from 40 levels. And right now, it is already in an uptrend and we are seeing some consolidation happening. So I would say that, yes, this still becomes a good buy because from here on also, a trading target, of course, comes to 68, 69. But even with a long-term perspective, I would look at a target of 100, 110. The other stock which I still like is RailTel. That has also been one of my recommendations today. Overall, rail stocks have been doing very well. And I still feel that at least 10-15% return from here on in RailTel cannot be ruled out. I am seeing the weekly chart and the daily chart also. Today also, if we see, it has consolidated and on Friday we saw there was a good volume pickup coming in. So I think it makes a good buy at these levels. To start with, I would look at a target of 230 to 40 and then from there on we would have a relook for further higher targets. So these two stocks are definitely on my radar right now.
Okay. All right, Vishali, really appreciate your time. Thank you for joining us. I just want to mark markets right now in terms of SGX, Asia, oil, crude, Dow futures. Now, there is no scary adjustment in the financial market. It's unfortunate what's happened in Israel, but Hong Kong is up. Japan is just a minor nick here or there. SGX down 60 points or GIFT Nifty is down 60 points. The implied opening is going to be 60 points lower, which is not very scary, so to speak. And if you check on crude also, it's not crude is up 10-15%. Crude was up 5-6% and now it's up in a reasonable range. It's not even gone past its recent highs right now. So Sandeep, from a market standpoint, every time when there is a geopolitical concern, markets, they get worried. What will happen to crude? What will happen to risk? What will happen to volatility? This event is unfortunate, sad, tragic, but true. But purely from a market financial standpoint, can we just move on and ignore it?
So, Nikunj, I think it will be too premature to say that. So, I think we need to see the developments as they unfold. At this stage, the greater probability is that it will remain a localized event of sorts and it will not get expanded into the wider Gulf area and with involvement of other countries. But I think the next 1 week will be crucial. So, we need to watch out for the developments. Per se, broadly on what has happened and how the other market reactions are. So I think Indian markets are relatively insulated in the sense that because of less exposure, etc., to Israel, except for defense cooperation, some pharma operations, etc. So we are not so directly affected unless and until crude runs up sharply, where the up move has been just 3.5%. Many of the Asian markets are shut today, so there's no real queue coming from the Asian market. So I think the 60-point downtick is par for course, and if the markets, even if they fall 100-150%, I think it would be a reasonably good reaction.
Okay, Sandeep, just stay with us. Lots more to talk about. We've got some exclusive info coming in, and we learned from our sources that Escorts is actually looking to exit its railway business. In fact, Somit is here with all that he's picking up from his sources. Somit?
So what we're understanding from our sources is the fact that Escorts is looking to completely exit its railway equipment business. Now, the evaluation that the company is looking out for this divestment is close to 4,000 crore rupees, which is nearly 14 to 15% of its total market capitalization at this moment. Now, the reason behind this stake sale for Escorts is the fact that the railway business has been a non-core business of the company, and they're looking to grow more their tractor business going forward. So even the funds that the company would receive from the stake sale would be used for the capital expenditure or for expansion purpose of the tractor business going forward. Now, this railway equipment business contributes only 9% to the revenue of the company and around 10% to its EBIT. And off late, the railway business has been doing good because of higher export orders coming in. And in Q1 also, they had won an order related to electric panel business, and their order book for the railway business stands at close to 950 odd crore rupees. And over FY18 to FY23, the revenue and EBIT of the railway business has grown 3x. Now, we also reached out to Escorts, and they denied to comment on this market speculation. But what we are picking up is that they are eyeing for a valuation of close to 4,000 crore rupees from the stake sale, which would be nearly 14 to 15% of the market capitalization, and they will be completely exiting the railway equipment business, that is Escorts.
Thanks very much, Somit, for highlighting all of those exclusive details. In fact, Sandeep, wanted to get in your thoughts. Eyeing a valuation of about 5,000 crore rupees, looking to exit this railway business. Your views?
I didn't even know Escorts is a railway business. I don't know really what's going to happen on this.
Fair enough. But this aside, how are you reading into the prospects of the new launches that we've witnessed? The fact that a lot of these auto majors as well will be banking on the festive season sales. They have acknowledged the fact that that premiumization trend as well has been seen across the board. What is your view on how auto is shaping up?
See, auto overall is well placed in my view because of the fact that demand was subdued for some time. Now it's coming up, and the late rains and the cropping patterns, along with the farm produce prices, indicate that there should be some revival in the rural sector also. And interest rates remain intense. So I think on the financing side, the financing will be available at the same rates, more or less slightly higher than what it was in the last festival season. And input prices have been subdued, and like you rightly said, premiumization is happening. So even with small volume growth, the value growth for many of the companies is much greater. So, and valuations in the overall auto space are reasonable. So I think I'm positive on M&M, I'm positive on Maruti, and I think on the two-wheeler side also, although we don't own any of the stocks, Bajaj Auto seems to be on a good run.
That it sure does seem to be. In fact, so far this year, we've already seen an uptick of about 38% coming in Bajaj Auto. And mind you, the chunk of the gains have only happened in the last 2 odd months or so. But Sandeep, if, this situation in Israel does get escalated, I mean, too early to say, to call it that. And if we do see a bit of a step back from equity markets, would you be a buyer into that weakness?
Yeah, at this stage, there is nothing negative per se about the Indian economy or the Indian markets. If at all, if you see the data which has been coming out, both in terms of inflation, in terms of growth, like the core industry data which came out just few days back, and it's follow through to what could happen to the IIP data, etc. I think things are looking fine for the Indian market. Some premium over historical valuations is just okay. So I think if there is a reasonable sell-off, it's only going to be a buying opportunity.
Okay, fair enough. Meantime, what's your outlook then on how things are shaping up within the entire pharma space? Just going by the kind of valuations, the kind of domestic market growth that we've seen, Sandeep, being very selective when it comes to pharma?
Yeah, I'm always very selective. So although some of the smaller pharma companies have done well, many of the smaller pharma companies don't have cash flows to support their valuation. So I just try to stick to the larger ones. So we have Sun Pharma as our core holding, Lupin as a contrarian bet, which we took year and a half back. That's doing well. So I think these are the two holdings we have. But overall, pharma is still a reasonably under-owned space. So if the performances keep on improving, we could see the stocks do better.
Okay, today you may want to look out for, what Sun Pharma does, because remember they own 72% stake in Israel's Taro Pharma. So maybe just a sentimental knee-jerk reaction that could come by over there. The first rates then on your screen, and the Nifty definitely looks a lot more believable. The Sensex rate will adjust for itself. Let's see what TCS is up to. The board is also going to be considering a buyback on the sidelines of their earnings. Sun Pharma, of course, has started off lower by about almost 1%. TCS, not bad there. Almost a 2% bump up on that particular stock price. Titan, MCX, these are the other two that you may want to look out for. MCX, after them getting the SEBI panel approval to shift to a new platform, 8.5% gap up, and this on a stock which has already seen a very, very steep run up in the last 2 odd months, or I think month or so. Titan is the other one which should just come up for you on your screens. That has come out with a very robust and very bullish second quarterly update, both for the eyewear as well as the jewelry segment. The growth has been exceeded what the market was anticipating. About a 0.5% uptick is what you're seeing on Titan as we speak right now. And then, of course, Reliance. Let's see whether that's seeing any material impact after Adia's investment of 0.5% into Reliance Retail. And if that is seeing any move, absolutely unchanged. I think the first rates are yet to trickle in there. There's also Tata Steel. The India business delivery is down about almost 2%, and Europe delivery has also slipped about 4%. So that's another stock which you may want to keep on your radars this morning. Prestige continues to post a very good pre-sales figure for the second quarter. It's an uptick of 102%, no less, and collections have come in higher by about 1%. And Sandeep, this is almost a consecutive trend that you're seeing, right? Real estate companies, all of their quarterly updates, the collections have been fabulous, and the pre-sales figures have seen a massive, massive uptick.
That's true, and it's been a bit surprising also how the real estate sales have held up, especially for many of the Bangalore, etc., south-focused companies where technology sector employees form a big part of their overall customer basket, and we have seen that hiring pattern in technology have been quite muted. Even the salary hikes have been muted. But overall, growth trends continue. I think the real estate sector has been coming out over the last 3 years out of, I think, 12, 13 years of depressed sales. So it could continue for some more time.
Now let's get in a take on the charts then. Some of the stocks that had it a bit rough last week. India Bulls Housing, for instance, shaved off about 7% plus. There was Glenmark Pharma as well, which declined, and something like an Indus Stars was down about 5.5% or so. Are the chart readings indicating that it could be a little bit more weakness?
So I think for India Bulls Housing, yes, the stock could probably get into some bit of more weakness at 175 odd levels, where the stock closed on Friday. The stock has come back towards the previous swing lows, but then the price patterns and the volume still indicate that there may be another round of selling which could come back into the stock price. So not too much bullish on the stock price over the very near term prospects. Yes, the recovery has been quite stellar for the stock from those 110 odd levels till I think 200, 205, which was the approximate high for Indiabulls housing. But I think the recent correction could probably have more legs on the downside. Out of the other names you mentioned, I think Glenmark is also something which looks very attractive. In fact, that's a stock which has done exceptionally well from the mid-cap end or the tier 2 large cap names from the pharma pack. So I think in case if the stock corrects, Glenmark Pharma and say comes back towards 740, 750 mark, that could be a very good level to buy.
Okay, 0.5% lower. That's where the Nifty is settling in at in the pre-open rates, and that's a cut of about 87 odd points coming in there, but holding around that 19,550 thereabout level. Sandeep, just wanted to get your thoughts in. I mean, all the newspapers have already reported it that the Godrej group is now going to be headed towards the split. The two cases in point, of course, GCPL, Godrej Industries, and Godrej Properties. What's the take here?
So how it helps actually the companies improve their performances, I'm not very sure, although we've seen a huge uptick in Godrej Industries stock price. So I think that's something we need to watch out for. Per se, fundamentally, if something changes, I'm not really aware of that.
Well, reports are indicating that the Godrej Group is heading to split that 1.76 lakh crore conglomerate, and the Family Council, it seems, is discussing the division terms as well. And some announcement to that extent could happen very, very soon. But anyway, let's get in some mid-cap strategies on that note. Kunal, what's it looking like for the mid-caps today?
So I think MRP is something which looks attractive on the charts. The stock has been trading with a decent degree of uptrend. From the previous lows in the month of June, July of 65, the stock has upped its base closer to 1992 level. So would suggest a buy with a stop loss at 92, targets of 106.
All right, there you have it. Those are some top trading strategies coming in. In the meantime, let's also get a view from you, Sandeep, on real estate. For instance, you have a lot of these companies that are looking at hitting their pre-sales goals, and that, of course, will have a ripple effect on the entire industry as a whole. So what about your take on infrastructure, names like an NCC, NBCC, etc.? How are you looking at some of these stocks shaping up?
Yes, so many of these stocks have small part of businesses coming from real estate, but I think if the real estate momentum continues, then stocks from sanitary ware, tiles, etc., all the or companies from the wire segment, fans, also. So the momentum continues at the second leg into those sectors. If the real estate sector does well on the pre-sales side, a year later the demand comes back for these sectors. Overall, I think that's also positive for economic growth as a whole, because real estate sector tends to be significant employment generator, and that has positive multiplier impact on the entire economy.
Okay, there you have it. That's the view coming in from Sandeep on infra. When it comes to the entire oil and gas space, what is it that you would look at, owing to where we're seeing the crude oil prices as well? OMCs on your radar?
See, OMCs in any case have become uninvestable because of the price caps which have been put on petrol, diesel prices. So it's it's impossible for an investor to invest in these companies. On what basis do we invest? We don't know what profits will come. So that free pricing regime has virtually effectively ended. I think these companies, I don't think are investable. And on the other side, we have Oil India, ONGC, etc., which are very inefficient companies. So I think some price uptick will lead to some uptick in their stock prices, but I think they are more trading plays.
Very quickly, before we count down to the market open, the GST Council decision to cut tax on molasses to now 5%. Does that have any repercussions for sugar companies?
I'm not very sure whether sugar companies directly benefit so much. So I've been also trying to get a hang of it, but I haven't been able to. But it looks like there should be some benefit per se, but I'm not very sure because I haven't interacted with any of the companies.
Okay. We'll pass on some research to you as and when we get hands on the same. But good to have you on the show, Sandeep, as always. Let's take it across to Nikunj as well and find out some of the key stocks on his radar.
See, the hallmark for IT companies, at least the big ones, is that all of them are now doing a buyback on a regular basis. So the markets are now clearly assuming that the cash which is coming back into the IT companies, they are doing a lot of buybacks. And that buyback in a sense acts as a cushion, because every time you do a buyback, it excites the market. Now, the problem with most of the IT companies is currently that even though the environment is not very easy to call, for most of the IT companies, valuations are way above the historical averages, and the stock has seen a run up. So, for example, you look at TCS, it is trading at 27 times, up 10%. It is outperforming Nifty. You look at Tech Mahindra, up 20 times, 20%, 20 times. It is handsomely outperforming Nifty. Similarly, with the exception of Wipro and Infosys, which was more like an howler, most of the IT companies, I think, have done reasonably well for themselves from the recent low. So IT is not cheap, but market expectations between April and now are different. In April, nobody expected anything from IT companies. Now, the expectations are high. And within IT also, Aisha, I think, Infosys becomes this special situation stock because of that guidance they've given. But I guess large deals are coming back. And that explains why a stock like TCS is not only at a 52-week high, it is also considering a buyback.
All right, let's get a move on and find out what the top index calls are from our chartists. And here's what they're advising on the frontline index. For now, remember, we're looking at a downtick of about 0.5% plus or so on the index. It's a hold call from Kunal as well as Kush, where Shali believes that it's an opportunity to buy dips. That's the market mood meter, a clear hold from our technical experts. Our chartists are leaning towards. Kunal, just let's revisit that strategy on the Nifty Bank Index. Run us through the performance, because it has been fairly divergent even within the large caps as to how some of them have performed in the week gone by.
Yeah, I think that's the concern for the banking index, that it's not, rather most of the large cap names, private sector banking stocks, which are heavily weighted in the Bank Nifty, as well as, of course, they have a high weightage in the Nifty. These stocks have been huge underperformers, and there's been consistent selling across these stocks, and I think that's bothered the market a bit more, because that would probably have impacted the sentiment for the banking index. Yes, the PSU banking stocks have managed to offset many of the losses into these private sector banking names, but then there comes a point where the PSU banking stocks get into overbought zone, and then the weight of these underperformance of the private sector banking names falls directly on the Bank Nifty. I think we are somewhere reaching that stage where an increased or an incremental amount of underperformance from these private sector banking stocks could probably lead into a more sharper reaction on the Bank Nifty on the downside. So I think we'll have to wait out for signals of more selling which comes back into these names. If that happens, then I believe that the prospects for Bank Nifty could also weaken over the very near term.
Okay, just counting down to the market open, less than 30 seconds to go, and it seems like we're definitely going to settle lower, much in line with the Asian sentiment this morning, although most Asian markets are still short, but about a 0.6% the kind of downtick that we're headed in for. Stocks that are going to be in focus, we've already been flagging that off. TCS, of course, considering they're going to be considering that buyback along with the Q2 results come tomorrow. There's, of course, Infosys as well, due for its numbers along with Eicher Technologies. Here come the first rates then on the screens right now. And we've managed to defend that 19,500 print for now at least, but let's see where it's going to head in and whether it's going to only worsen from here or not. And seems like it's getting pretty close to testing that 19,500 print for the Nifty 50. Similar move for the Sensex as well, down about 0.7%. And you're seeing quite a bit of red actually across the screen as we speak right now. Asian Paints, Tata Steel, ONGC, Adani Enterprises, Adani Ports, SBI down 1.5%, NTPC, quite a bit of red in there. Let's talk about the stocks in news then this morning, and Reliance Industries, considering ADIA is looking to invest into Reliance Retail for that 0.5% stake. 0.7% lower for Reliance, which is now, by the way, about to even breach 2,300. And I think this is going to happen after a while. TCS, let's see what that stock is up to. I think it was in the red. Those are the first ticks on TCS. No, 0.5% higher, 36.37 on that stock, ahead of its numbers in buyback tomorrow. ONGC, crude surge, Brent back to $90 per barrel on the West Asia conflict. About 1.5% is the uptick that you see on ONGC. Titan as well, positive news flow there after the second quarterly numbers. Both the jewelry as well as the eye care businesses are looking robust. 1% lower for Titan, not really seeing any cheer there. What about MCX? That has also come out. SEBI panel has approved shifting to a new platform. MCX holds up about 1.25% in an otherwise weak market. Positive management commentary from both Metropolis as well as Prestige in their Q2 updates. So look out for what both these stocks as well do. And then, of course, there's RVNL as well, which has, got a LOA from the Mumbai Metro for a project worth about 395 odd crore rupees. 4% is the gap down that you're seeing on RVNL. What about Tata Steel? I think that started off in the red, considering the India business delivery is down nearly about 2%, and Europe delivery has also slipped 4% on a year-on-year basis, 2.5% lower for Tata Steel as we speak right now. The big mover from last week. Let's see what Bajaj Finance is up to after that fundraising, and then in the run-up to that as well. Bajaj Finance takes a breather at 81.20 as we speak right now. ICICI Bank, Infosys, HDFC Bank, just want to revisit all these rates. 0.5% lower for ICICI Bank, Infi marginally higher. And then HDFC Bank down 1% once again. Kunal, what's it looking like? Seems like we're already headed into breach 19,500. What would it mean?
Yeah, I think it could again mean that we are back below that 50-day moving average for the Nifty, and that could, I think, dent the immediate prospects for the market. So, not a great opening for the indices. There's got to be more selling pressure across the board, especially for the stocks which have been showing signs of recovery over the last couple of days, and specifically the last 3 days of the market recovery. In terms of the opening trade, DLF is something which looks attractive. So the stock from the real estate pack looks quite charged up. So we'll wait out for some mild corrections into the stock price to buy into the dip.
All right, there you have it. That's a buy recommendation coming in on DLF. And a quick check-in on the broader universe as well. And it looks like that underperformance is pretty evident this morning. It's a sharper cut as compared to the frontline indices, in excess of 1%.